What's up, everyone? It's Scotty with Money Investing. Quite a day in the markets. We had consistent selling pressure intraday with the Dow Jones down a little bit over 1%, the S&P 500 down 1.5%, and the Nasdaq selling off almost 2% on the day. We did break down below the consolidation range for the Nasdaq as well, but the entire story flipped after hours after Microsoft reported their numbers, and it was up over 9% after hours, and Google also pushing up 1.5% with the futures once again completely flipping back to the upside. So we got lots to unpack. We got lots to go over in this video. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. And there is a 16% annual discount available till the end of this month. And after this month pretty much is ending, that discount goes away. So you get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, as well as the member benefits and private videos, private live streams, and of course, the trade ideas and day trading opportunities. Everything's going to be included. So link's going to be down below. So this right here was the state of the market. We had consistent selling pressure. So like I said, from the beginning, we had, markets rotating back lower and continued to be very, very weak. And we had this, extreme selling pressure for the Nasdaq, for the S&P, and for the Dow Jones. This right here is going to be the market breadth, advancing versus declining stocks. And you can see that over 2,000 stocks were down between 2 to 5%. Over almost 1,800 stocks were down somewhere between 0 and 2%. So in other words, if you combine these two numbers, we're looking at 3,800 stocks that were down between 0 and 5%. And then a small percentage, 806, were down 5 to 10%, and 319 stocks that were down over 10% on the day, with very, very few stocks actually pushing higher. 756 stocks up between 0 and 2%, and then very small percentage of stocks between 2 to 5%, 245. You got 5 to 10%, green 118, and only 116 stocks actually up over 10% or more. So in terms of advancers, only 1,200. Decliners, almost 5,000 among 7,228 stocks. So if you do the math there, 5 divided by 7.2, we're looking at 70% of the market was selling off here on the day. So stocks closed lower Tuesday as investors' bank fears return. Dow sheds more than 300 points. So we also learned from First Republic Bank the amount of outflows that bank has experienced is quite crazy. $72 billion worth of outflows from First Republic Bank. Not to mention, if you exclude for the $30 billion cash injection that they received from some of the largest banks, if you combine that, it's closer to $100 billion. So it's a pretty substantial number. And they mentioned that the deposit outflows have slowed down, but that still didn't stop investors from absolutely demolishing the stock here, which was down over 40% on the day. So Dow Jones obviously dropping 1%, S&P down 1.5%, and the Nasdaq closing in down almost 2% on the day. So for the first time since this earnings season has started, we've actually seen the markets react. This was Art Hogan, Chief Market Strategist at B. Riley Wealth Management. There's been a built-up or pent-up selling reaction to earnings that are just okay, but not great. And today the floodgates seem to have opened. And once that started, nobody wanted to get in the way. And we also learned from UPS, which did not report very good numbers either. So disappointing earnings report from UPS, which dropped about 10% after the company missed expectations. And not to mention the guidance was also not that great. And UPS is a very, very good indicator, right? Very nice indicator of future potential consumer retail sales and retail spending. And as a result, if UPS is not guiding good, it's not going to be good for the economy. Now, I just want to go over some of the names today, which were obviously selling off aggressively. This is our FANG Mint watch list. All the big tech, and Apple down almost 1%. Tesla down over 1%, just trading and hovering around 160. Netflix down almost 2%. Google down 2%. Microsoft was also down 2.2% during the day, but of course, after hours, absolutely ripped apart over 9%, getting back up to $292. I think it might have just hit a new 52-week high. Meta was down 2.5% after hours, pushing up 1 to 2%. Nvidia was down 3%. There was actual tears of joy in my eyes when Nvidia was down 3%, coming down below that 21 EMA. And then, of course, after hours, rallied back up to 268, 269. I think it was up a little bit over 2.5%. Amazon also up because Microsoft's Azure growth was over 30%. So there are expectations that Amazon is going to report some very good AWS numbers, down 3.4% on the day, but up, I think, 1 to 2% after hours. And AMD was down over 4.3%, so absolutely getting crushed here on the day, but after hours, once again, pushing higher. So I'm going to be doing a separate, more detailed analysis on these companies, so don't you worry. We're going to be doing dedicated analysis on Microsoft and Google and Pepsi and Spotify and all these companies, but just want to briefly go over what they reported, why the stock's up, just for the sake of this market update. So Microsoft reports earnings beat and says AI will drive revenue growth. So AI. That's all the hype there is, and they pretty much said what the street wanted to hear. And growth for Azure and other cloud services slowed to 27% from 31% in the prior quarter, but was still faster than expected. So 27% growth for Azure is still really strong, and that's really what's driving both Amazon and Google. Google, of course, on their own earnings, but Amazon for the most part because of Amazon Web Services. Now, earnings came in at 245 versus 223. So that's a beat, and revenue came in at 52.8 billion versus 51.02 billion. That's another beat. And for the fiscal fourth quarter, Amy Hood, that's the CFO of Microsoft, she said revenue is going to come in somewhere between 54.85 to 55.85 billion. During the conference call with analysts, the middle range was 55.35 billion, implies a 6.7% growth, topping estimates of $54.84 billion. So revenue beat, EPS beat, we got a forward guidance beat, and we've got AI. That's your recipe for a price that's going to rise over 9% after hours. So every single company should take note. Alphabet reports revenue and earnings beat for the first quarter as well. So we got EPS coming in at $1.17 versus $1.07 per share, and revenue coming in just under 70 billion versus 68.9 billion. And YouTube advertising revenue was surprisingly higher. I don't believe it. I mean, I don't buy the fact that YouTube advertising revenue was up, because all the creators that I know of and all the creators that I've kind of contacted and are in my network and seeing my personal earnings as well, I mean, it's just been trending lower because advertising has not been as strong as before. And even compared to 1 year ago or 2 years ago, it is nowhere near close to the same rates as what we have seen in the past. So I kind of find it hard to believe that YouTube advertising revenue was up and better than expected numbers here. Cloud revenue, 7.4 billion. In fact, cloud revenue, they're for the first time, they're actually profitable on cloud. So Google's cloud business turns profitable for the first time on record. And they said pretty much that their cloud group has turned profitable on an operating basis after showing losses for more than 3 years. So that's another really positive thing. It's going to improve the margins. It's going to improve profitability. And they're also authorizing a monstrous buyback of $70 billion. So all of that is obviously going to trickle down to the bottom line in terms of EPS. And it's really going to help Google manipulate, again, strategically, their earnings per share. And as a result, the valuation is going to start to feel really, really attractive as they continue to plow money back into their own stock. So again, I'm going to be doing a separate video on both Microsoft and Google. So far, from all the numbers, they reported some good numbers, some good growth, some good guidance, and some good, growth in cloud business and infrastructure and all that stuff. And of course, authorizing a share buyback as well. And with AI and everything that they're building, the stocks are up after hours. But this right here was the intraday selling pressure, right? Absolutely disastrous. Amazon down 3.4%. Like I said, Google, Meta, the entire semiconductors, all of tech, entire financials. We got capital markets, we got diagnostics, medical research, healthcare, medical devices, industrial, real estate, energy, consumer defensive, materials, utilities was slightly higher, defensives were slightly higher, healthcare was slightly higher. So this was a very, very risk-off / recession playbook type day where we did have healthcare, defensive, and staples push higher, as well as utilities, and everything that's risk on was selling off. So this was the entire state of the market, the S&P 500, and of course, all 11 sectors in the S&P were down, except for consumer defensive utilities, which were also down, but not as much as some of the other sectors. Again, defensive and utilities, recession playbook from the market. Over the last 1 week, utilities and defensive are the only two sectors that are actually performing well. And over the last 1 month, we've got 10 out of the 11, in fact, 9 out of the 11 sectors pushing higher, with technology and comm services are the ones that are underperforming dramatically. Sugar prices higher, orange juice pushing up, platinum, cotton, silver, and soybean metal, along with palladium pushing up. Cocoa prices, coffee, natural gas, volatility, and lumber prices selling off. Once again, a little bit of after hours risk on, with Bitcoin back over 28,000, up over 3.5%, and Ether also back over 1850, up over 2%. So really what we witnessed today was intraday, lots of risk off environment, lots of selling pressure for tech, for crypto, for your semiconductors, your financials, your energy. And then after hours, once the earnings were released, it was back on to risk on. It was like a switch that turned on to risk on, and Bitcoin, crypto, Ether, all pushing higher, with Microsoft, Google, Amazon, Tesla, Meta, all these stocks also pushing higher after hours once again. So I want to come back to this chart, which is very, very important. But first, we want to talk about volatility. And the VIX was up over 11%. So back over 18.75. So that's something to keep in mind, because we are once again trading at a really, really low level, and something that we have discussed in our previous videos, where the volatility is coming down to some extremely low levels, which in the past has triggered some warning signs for the market, because once the VIX spikes, the markets sell off. And we did get a pretty aggressive sell off today as the VIX did spike. So keep a close eye on this. If you do see some more upside here in the volatility, if the VIX gets past 20, 25, 30, 35 levels, of course, that's going to lead to potential more downside for the markets as well. Crude oil prices are once again stabilizing. We have come down to fill this gap. We did see a little bit of a push higher, then sell off here yesterday, down almost 2%. And right now, as it stands, we're just at over $77 a barrel. So if we continue to see a pullback for crude oil, next support really is going to be down to $73.50 to as low as $74 per barrel for crude oil, and resistance is going to stay put at $80, $81 per barrel. So those right there are going to be the ranges. So resistance at top, support at the bottom, and those are some of the levels to pay attention to for crude oil. And not to mention Bitcoin, once again, getting a little bit of a lift back up. This is mostly after hours, after the numbers were released from these companies, and we were a bit risk on here. So resistance is going to be at 28,700. So that's going to be the level to watch for Bitcoin, and of course for Ethereum. We're also watching close to $18 or $2,000. That's going to be pretty much in line with this level right here, and support level is going to stay put down to 1740. So now coming over to QQQs. Now, this is something that I mentioned in our Discord prior to the markets even opening. I mentioned that this is the overall trend for QQQs as we continue to make these lower highs and these lower lows. This right here is the downtrending channel. And that is one of the reasons why I did not take a trade on TQQQ as soon as we approach this support level. You know why? Because the momentum was so weak, because we were consistently making these lower highs and these lower lows, and we were trading inside this downtrending channel. And I was almost certain and confident that it's possible that we see a bigger breakdown here below this level, and it won't be worth going long on TQQQ, anticipating this move higher because of this consistent weakness in the markets that's been brewing over the last couple days. So for that reason, what we're going to see tomorrow is the markets push higher, especially the NASDAQ, which is gapping up. So right now, futures are green. We got the NASDAQ futures up 1.3%. So let's just take it at face value. Let's just say the NASDAQ opens higher, 1.3% tomorrow. We are going to open somewhere around here inside this green rectangle once again, right? So we're going to gap up, and then it's going to become really interesting whether we start to fill that gap on the downside. In other words, whether we start to see some intraday selling pressure, or if you see some more momentum back higher. But there's not a lot of potential upside left here, considering that we're still in the context of this downtrend. And if you do gap up and continue to rally intraday, which in my opinion is a bit unlikely scenario, the highest I could see it get up to is 315. So this right here is going to be that level that's in line with that lower high for QQQs. So that's something to keep in mind, right? Because we are starting to break down below this consolidation pattern. So for the longest time, since entirety of April, what we have noticed is the markets go sideways, up, down, up, down, up, down. It's just been trading in that range, right? Resistance here, support here. You can see that. You can see that rectangle, right? Where we've been just trading sideways. And what happened today was a pretty big breakdown. We broke down below this level. We are coming down to the same level from back on March 29th, 2023. So this is not this is not something that we can just ignore. This is not something that's like a normal occurrence, but it is a pretty big breakdown that we're seeing after weeks of consolidation for the market. And this is all coming after we hit that bear camp, right? So if you come over to the NASDAQ here, you'll notice that we were once again at a bear camp for the market, and we are now starting to roll right back down. And again, after hours, we are up, so it's going to put some momentum back up on the upside. But once again, you can see the momentum lower, right? You can see 2 consecutive red days for the markets. Yesterday, we were down over 1.2%. Today, we're down another 2% almost, selling off pretty aggressively. In fact, this is the 4-hour chart. So this is the daily candle here, right here. So pretty brutal red candle here on the day after we hit that bear camp. So the point is that tomorrow, it's going to be very simple. I'm not going to take the bait. I'm not going to take the institutions are not going to suck me in on this potential rally that we're seeing after hours, only because the technicals do still suggest that, yes, even though we gap up here tomorrow, it's possible that intraday we start to see a pullback, or even if we do start to push back up, we are still sitting inside this resistance. We are still sitting inside this potential bear camp. We're not out of the woods just yet. So keep that in mind, because this is again getting rejected and selling right back down, similar to what we just saw back in February, similar to what we have already seen in our previous months as well. Same thing happened with the S&P 500. So again, a pretty brutal red candle coming down 1.5% and getting rejected at this bear camp, which again, we have talked about time and time again on the channel in our previous videos, where this right here is a level to focus on, and where it is what it is. I mean, that's a technical resistance, and we've talked about it. So something to keep in mind. So talking about Apple here, down almost 1%, but after hours, it was flat, up over 22 basis points, so not really moving all that much, and really just consolidating inside this downtrending channel. Very, very modest lower highs and lower lows, so not really moving higher or lower, but instead just really trading sideways. So this right here is still going to be that level to watch, and of course we got a support sitting down to $158 for Apple. Talking about Amazon here was up substantially, up a little bit over 4% after hours. So seeing a lot of momentum here after selling off 3.4%. So we are seeing lots of momentum come back in after hours, and resistance and target's going to be up to 114, 115. So this right here is going to be that level to watch, with the support sitting roughly at $103, $104 per share for Amazon. Tesla on the day, after hours, didn't really move all that much, only up 70 basis points. So really just consolidating sideways and slowly and steadily kind of drifting lower. This right here was at symmetrical triangle, and then we broke down after the earnings. We broke down below the support as well. I did end up selling cash secured puts on a Tesla. We'll continue to do that with a couple more contracts if Tesla continues to sell off even more. We've got a gap to fill here, somewhere between 146 and 152. So we're going to keep that in mind, and resistance all the way up to 165 to as much as 175 for Tesla. Talking a little bit about NVIDIA now. And NVIDIA was down aggressively, down almost 3%. In fact, selling off below its 21 exponential moving average, something that we have been paying attention to for a long time. So this right here is a 21 EMA, and getting a pretty significant breakdown, right? This is a pretty brutal red candle. And like I said earlier in the video, I had like tears of joy when NVIDIA was starting to really pull back. But then after hours, this stupid Microsoft completely changed everything back over $269, almost at $270. But that being said, it's possible that we do see a breakdown and a retest back up to this old support as a resistance, and then continue that selling pressure. Because oftentimes, and something that I have mentioned in my previous videos, is that let's just say that you've got this as a support, right? So this right here, let's just say is a support level for a stock, and it's bouncing off of these levels consistently, right? It's coming down, it's bouncing off, it's coming down, it's bouncing off, it's coming down, it's bouncing off, but then eventually it breaks, right? And when that support level is broken, it goes back up to retest, right? So old support acting as a potential resistance now, and then gets rejected and then sells off even further. So it's possible for old support resistance levels to turn into new support resistance levels. And it's possible that we may see that tomorrow, where the markets, individual stocks, a lot of them, which did break down below their support levels, they start going back up to retest their resistance. I think the same can be applied to QQQs on this chart as well. As we broke down below the support, it's possible that we go back up to retest and then get rejected and sell off intraday. Something to pay attention to here, definitely. Talking about advanced micro devices, and AMD was down over 4.3%. After hours pushed up 2.2%. Really, that support for us is waiting all the way down to 78.50. So that's going to be in line with this higher low. But AMD obviously has been selling off so much, it's oversold. So I wouldn't be surprised if the technicals do hold up a little bit better for AMD than they do for NVIDIA. Because again, AMD has really been doing its fair share of selling pressure. It's been selling off pretty aggressively. So it's still in the context of this higher high and higher low pattern. We talked about this resistance being really strong. So there's no surprise that we got rejected here, 102, 103, and then we started selling off down over 17, 18%. Talking a little bit about PayPal, and PayPal here on the day was down a little bit over 3.3%, so selling off a little bit more aggressively here. After hours was up almost 1%. So really what we're seeing is, again, lots of consolidation sideways in that range, with a lower high sitting at $76, $75, and of course support level staying put at $67.50 with my fair value at $70 per share for PayPal. Talking about Square, and Square here also pushing higher after hours, up over almost 2%, and still in the context of this downtrend, so really just making lower highs and lower lows. And support level is going to stay put at $58, $59 with a resistance all the way up to $67, $68 per share over here for Square moving forward. Talking about Meta, and Meta here on the day was also higher after hours, pushing up over 2.3%. So intraday down 2.4, after hours up 2.3, so pretty much net zero, not really moving anywhere, just flat on the day. And again, resistance is going to stay put at $222 and support all the way down to as low as $198, close to $200 per share for Meta. And on the 4-hour chart, you can see that we're now starting to break down below that 21 EMA. So we have really been trading below that 21 exponential moving average. And right now we're just going back up to retest that level as a potential resistance again. So it's going to be quite interesting tomorrow morning whether these gains actually hold up or intraday we start to see some selling pressure once again. Talking about Netflix, and Netflix on the day was down almost 2%. No price action after hours because they've already reported their numbers. So as a result, it's still trading inside the context of this symmetrical triangle of lower highs and higher lows. So you can see that we are just still trading inside this range with a support sitting all the way down to 307 to as low as 275. Resistance sitting at 337 all the way up to 380 for Netflix. Talking about Google, and Google here was very much back and forth. So lots of consolidation. In fact, it got up to as much as 109. It got down to as much as 101. And we pretty much ended up closing flat. So only up 1.5%. So lots of consolidation sideways for Google. And again, it's going to be quite interesting to see how it trades tomorrow, whether we get a breakout over 109 or not. But really, that's the consolidation that we're seeing for Google at the moment. So this right here is the box within which Google has really been trading at. So support level is going to stay put at 101. Resistance at 109 for this company. And now we come to the winner, Microsoft. Great rally, by the way. 8%, absolutely blew past 298 after hours. In fact, got up to as much as $302, hitting a new 52-week high. And I think a new all-time high is almost very close. Actually, no, never mind. It is still pretty far away because 340 is the level, and it still needs to rally another 18-20%. But a very nice rally past $298, $300 per share for Microsoft. It was moving in the right direction for our potential short here. There was a lot of profits to be made further with a target down to 245, but of course, after hours, the stock rallying quite aggressively. So keeping a close eye at 292 as a new support. So this right here is going to be turned into a new support level to watch for Microsoft with a significant gap up. It's possible that we do see some intraday selling pressure to bring us back down. So that's something to keep in mind for Microsoft. And last but not least, we got Shopify. And Shopify here on the day was down over 3.2%. After hours, let's take a quick look. Up over 1.7%. So really just consolidating sideways at the moment. And support level is going to stay put at 41 to a resistance all the way up to $54 per share. So, excuse me. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. 16% annual discount available with a link down below. As always, happy investing. I'll see you all in the next video.